Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of SoFi Technologies, ticker symbol SOFI. But before I get into that, I just wanted you to know that I am streaming Sundays and Thursday evenings at 9 p.m. Eastern, going over any tickers that you want, taking requests, going over them live. And yeah, so that's what I'm doing. I'm also trying to do an additional stream during the week, at least one. This week's actually been kind of chaotic with those streams because I've already done more than one additional stream. I did Palantir's earnings call yesterday, and I will be doing PayPal's earnings call tomorrow. I just got to set that up. And then, yeah, I might even do one on Friday just to kind of top off the week. And yeah, having a lot of fun here and learning a lot from the tickers that you guys request. So keep bringing them in. And also taking clips from these streams and then making those into videos seems to be a nice way to do this. And also, if you don't have, if I don't get around to making those clips and you do want to see some of the tickers that I might cover but don't have time to watch the full stream, I am going to try to put timestamps on these streams moving forward. So, let's say, Neo popped today. It looks like there's a bottom. I will be doing a video on Neo later today. But if you really want to see content on a specific ticker, you can scan the timeline there to find the tickers that I've covered, and also check the description there. That information should be there as well. But yeah, and so to start this video, I'm going to go over SoFi because it's been a while since I made a video, and I wanted to take advantage of this stream and turn this into a clip that will be released later today. So that should be pretty cool, and I will probably release clips from other tickers, ideally before market open tomorrow, so keep an eye out for those. But if you're here watching the stream, whether it's live or after the fact, welcome. All right, so, and going over SoFi, it's been a few weeks. I can't really remember the last time I made a video on them, but I do want to point out some things. Earnings does look like, we saw this nice pop following that. I believe earnings was either on the, I believe earnings was on the 29th, and I imagine it was before market open, but I might be wrong. We see this 20% pop. Attempt to fill this gap up here at $9.52, but really that gap would more properly be filled based on the close of January 2nd, which would be 965, so couldn't get up to those levels. And yeah, then we saw this big pullback the following day, down more than 8%. And yeah, really coming back down to this $7.50 line that I've marked in previous videos. And yeah, so I'm very curious to see what happens with this stock, if it's going to test the top of this channel more properly and then bounce, or if it's possibly going to break back into it and maybe fill these gaps to the downside. I had pointed out in, I believe, one of the first videos I put out on SoFi, this uptrending level of support. You can see that there are a couple pierces of it, so it's quite possible that line could be adjusted. But I had been thinking that there's a compelling case for not only the price coming down to retest that trend line, but also while doing that, fill these gaps. You can see this nice volume shelf down there. So, I do think support would be found there if price does drop that low. But right now we are above support, and also, psychological level, $7.50. Because we think in quarters, I don't know that we use quarters anymore, though, who needs change? But yeah, so there's that line there, and I was thinking I'd just do some Fibonacci retracements. I've been doing a lot of those on the channel to get an idea where this might be going. And so there are a couple of retracements that I could do, really to kind of wanting to identify the bottom. And so to do that, we want to take a retracement from the bottom to the top. And so I could do that from here as well as here. This would be kind of a larger picture type of levels, and this one will be more fine-tuned. And yeah, and this one actually probably offers more insights because we have not gotten too close to the bottom there. And so yeah, I'm just going to do that from the low here at $6.41 up to the high here I'm not sure what that high is, so I'll have to adjust it. Let's see, and I've got to add the fib levels back into it. Kind of embarrassing. But yeah, and then I've got this 2618. It's probably not going to be useful, but it's on there anyways. And so yeah, I'm just gonna, that looks like it's on there just right. Okay, and so levels that we can see, the 786 is at a price of $7.28. So ideally, 750 is going to hold, but if we do want to be testing the top of that channel as support, I do think coming down to $7.28 would be good. Maybe just a tail or a wick of a candle coming down there and bouncing. If we do, however, close below $7.28, I do think that could be a bad sign that price could be going down, possibly doing a full retracement down to $6.41. But, before we get onto full retracements, and I don't think that it's going to be going down to $3.89 anytime soon. I think it'll probably find some support before then, but, that could just be a stair step down. But anyways, before I talk about this 100% retracement, I should look at this smaller scale run up here, because that might offer some finer tuned insights. So it's based on the low here that was found on January 19th, going up to the high here on the 29th. And I'm just going to have to adjust these, I believe. Oh. So yeah, I'm just doing these to the cent because I just like to have the levels just right, even though, these are all approximate. Excuse me. All right, and I'm actually going to color this one yellow so it stands out from the other one. And so what we can see here is $7.69 is the 786 retracement for this Fibonacci, and it's quite possible that's serving as support. We did see one close below it, but this actually could be a reversal signal with this spinning top here and then this bar coming up. Will be interesting to see if the bar closes right around, let's see, $7.88. Not only the close on February 2nd, but also this red line that I have marked here. So I think that could be a really good sign that we have put in a bottom there, but it could also be a fake out. I will do I will do CHPT in 1 second. I'm just going to finish this real quick, and then I'll get on a ChargePoint. And happy to do ChargePoint. That's one of my favorite tickers, but it unfortunately doesn't get that many views all the time, so I took it off the weekly rotation, but I'll definitely do that. Yeah, and so I do think that the bottom could be in here right around, especially, we do see these two tails coming down to pierce 750. So that could be a real sign that SoFi has found a bottom, at least for the short term. And then, yeah, we could look doing the retracement from up here to down here, as well as assuming the bottom's in from up here to down here, we could get an idea of where it might be going to the upside. But I do think that $7.69, this 786 retracement level could be key. But if not, if we do break lower, 721, which also does, kind of nicely correspond with the 786 from this bigger retracement at $7.28. We've got this one at $7.21. The confluence of those two levels could suggest that will be, the ultimate bottom before a rally up. But of course, like always, that could break down. I could be wrong. But it is encouraging to see this volume shelf here. So I do think that 750 really just being a psychological level, I do think those are powerful. I do think that could be an approximate level there, a bottom, because the reason why it's psychological, why you do that, let's say you do this retracement and you see, $7.28. That's where the bottom's going to be. But if it doesn't hit that level, we think in quarters. So $7.25, that would not hit it. $7.50, the next level up, that would be a good place to have an order to really guarantee that fill for buying the dip. But, of course, it could dip lower, like getting back into that channel. And the 1618 for this shorter retracement is down to a price of $5.83, just below the psychological level of $6. And here it looks like a gap fill at $6.05. So that is definitely on the table as well. But, of course, that could be filled later on. And it could be that we never do really spend much time in this channel again. These gaps could be filled over here with the top of that channel serving as support. So do keep that in mind. And that would be, coming to these levels would be in July of this year. So we got some time before that happens. But yeah, I'm just going to do retracements to the downside to get an idea if this is the bottom, where it might be going. And so, yeah, I'm just going to take a retracement from $10.49 down to the low here. Let's see. That needs to be adjusted. All right, and so from this retracement, don't see anything around $7.50. The closest thing would be the 236. And actually, this is, for us looking for resistance now, coming from the top down here, we're looking for a bounce. Where would that go to? And from this, speaking of this, we do see that price went up to the 618 and $9.24, got rejected there following earnings. Makes sense. Couldn't make it to fill this gap, showing some weakness there with the big wick up, followed by this wick and a big down day the following day. And so, yeah, I think the 618 right there, could not be held. And so we noticed that, with this close below that level on January 29th. So that was a clear sign that this was coming back, pulling back. Did get a little gap here. Let's see, the low on the 30th was $8.38. So that might be a gap to the upside to be filling. But yeah, I do think that the 618 very clearly shows the top there. The high on the 29th was $9.45, but you're never going to sell the absolute top, you're never going to buy the absolute bottom, and so these fib levels do give a nice idea about the price. And then I'll just do one more before I get onto ChargePoint, one more retracement from the top here down to the bottom. I'm just going to line this up just right. So the high was 945, looks good there, and the low here I believe is 45. And I'm going to color this, yellow so it does stand out. And so, okay, where might this be going? If it were to go back to the 618, which it had done on the last run up, that would be bringing price to $8.69. So I do think that is a level to keep in mind. However, if price can't get up that high, there does seem to be, a confluence of these two levels, the 382 from the bigger scale, larger scale retracement. The 382 is at a price of $8.46, whereas the 50% retracement here is just 1 penny off at $8.45. So, that could really be, the next level, maybe to then pull back and test, $8 as support then before going higher, make an attempt at that gap at $9.50 or, a little bit higher, like $9.65, which was the close on January 2nd, as I had mentioned. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching. Man, I'm going to have to edit that down because that's like 13 minutes more. I don't know that people are going to want to watch that much stuff on SoFi, but hopefully it was useful for you guys. And on that note, I will go over ChargePoint. And I did also get a request for gold yesterday, so I will go over gold at some point too. But yeah, I will first go over ChargePoint, one of my favorite stocks. As you can see, I've done some retracements on this. Oh, looks like, let's see, what's the, and I'll do Fisker as well. I'll throw that up there. Yeah, Fisker, I think that's one of my most consistently popular videos, so I'll definitely be doing an update on that one on Saturday. And yeah, so this is really interesting here. It almost looks like a bullish engulfing candle, but it looks like the close here yesterday on the 5th was 188, and that was the open, I believe, today. So it's not technically a bullish engulfing candle. I believe you do have to have, the second candle really encompassing that full candle, not meeting it. I mean, it looks like it's up 6.9, 6+% on the day. And, let's see. And doing this consolidation. Yeah, and something that I'm not great at. I think it's because I tend to have a bias. If something's going one way, I want it to continue, and then it fails. I'm actually just going to delete this. I'll probably put it back up in a second. But yeah, this, I'm a ChargePoint bull. I don't know how you could not be when it's this low, just beaten down so much, especially following this big gap down and not reclaiming it. But yeah, I mean, we do see this, downtrend, and then we start to go up. So this is also downtrending, so it makes me think it would more likely break to the upside. But this could be bearish consolidation. Let's see, what are signs that this could be bearish? One is, this is a bearish engulfing candle. We did see, down more than 6%, just over 6% on the day, January 24th. So that's not a good sign, but it's been many days. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, nearly 2 full weeks of trading following that bearish sign, and we've been able to consolidate here. We have been putting in lower closes, like this one at 188 that I had just mentioned, but we have not gotten any closes below these lows. And so the low on January 25th was $1.96. Wait, no, sorry, the low, not the close. The low was 187. Damn. Yeah, so I guess we did put it in a close. Oh, that was the low. The close on this day, yeah, 188. Man, I'm going crazy here. The low, 187. Yeah, so that's lower than the close here. So that does suggest that, if there was not necessarily a reversal signal, but if this is, kind of like a bottom at 187, we have not put in a close lower than that, suggesting that that could be respected as a bottom. We did put in lower low, however, on, let's see, January 29th, hitting a low of 186. And so, we really just don't want to be seeing closes below 187, 186, and we have not seen that. If we do get a break below, that could suggest, a revisit to like the 150 area, and definitely possibly to fill this gap at 176. But again, a more proper gap fill would be right around the close, which would be 174, because from that close, gapped up to the open here. And so, right around 170 could be a level that the price would go to. And I think, I'm just going to, actually, no, let's see. Don't want to do that one. I'm going to do a retracement from here to here. That might suggest where a bottom is. So from 156 up to the top here, whatever that is. Oh man, my cursor's screwed up. All right, so that is a high of, I'm off by 2 fractions of a penny, but I'm going to make it just right. Okay, and so from that, and I might actually make this one yellow so we can see it a little bit better because I got those yellow lines there, or white lines there. And so it looks like 50% retracement at a price of 192. It does look like it's acted as support over here. We did get 1 close below it, 2 closes below it, but we are reclaiming it today, but it looks like we're getting rejected from the 382 at a price of $2.05. Hopefully we can close above $2. 201 would be really nice for the day. Does look like there's, a bit of a volume shelf where current price is because we see this consolidation here. And taking a step back, we still do see that because it's just all of this consolidation here. That will hopefully serve as a floor when we do break to the upside, but we'll have to wait and see. This could go down more. This could come down to the 618 and $1.83.5. That also does seem to coincide with this white line that I've drawn here at 184. Looks like it was the open on this day when we had this bullish engulfing candle formed, and then following that, that was really like the dip buying opportunity before this run up and then sell off. And I should note, I've gone over this in previous videos, that we did see this bearish divergence down here with the lower highs in the stock price and the higher highs in the RSI. And then let's see, do we see anything like that with the current RSI? It does look pretty flat as far as bottoms and tops go. Yes, so no divergence there. But yeah, I would just keep an eye out for like $1.84 right around there, or $1.83. Now, hopefully you don't get any closes below that. If we do, I think that the gap fill here and the 786 at a price of $1.71.4 would be on the table. So keep an eye out for that. But yeah, hopefully that was helpful. And I'll probably be putting a clip out on this because ChargePoint has gotten out of the rotation. One of my favorite tickers. I think that this will be helpful for those holding it. And also it's helpful for me too, because I am holding ChargePoint. I was buying it. I'm not sure when I started buying it, but I started buying it up here, and I average into positions very, very slowly. And then when I saw, I think this was following, I thought this was following earnings, but I guess not if earnings is over here. Some news, I saw this drop, and I just said, that's either a dip buying opportunity, and I'm not going to miss it. I'm not going to let it pass me by, or this is just going to keep going down. And I said, I think it's a dip buying opportunity. And so far, somewhat correct. This is really it down at 156, but how can you know? And I should, yeah, this no divergence here because we do have a higher, let's see, lower highs being put in here, lower highs put in here, and then from the low here, it's the RSI is about flat, from these levels to this low. So that's actually a weak bullish divergence in that we did get a run up after that, a weak run up. And so right now I'm thinking, since we did have this run up here, I do think that this is going to be bullish consolidation. But I believe most videos, whenever I say bull flag or bear flag, the opposite tends to happen. So those are still, I'm still getting a grasp on how to identify those. But yeah, I'll move on to Fisker now. Sorry, just gotta have some coffee. I just woke up an hour and 20 minutes ago. I'm working the night shift this week. But yeah, so Fisker, ticker symbol FSR, did go over. I'm not going to make a video on this one because I make those on Saturdays. But, yeah, so I'm not going to do the little intro for this, which I think I forgot to do for ChargePoint. Oops. But yeah, okay, so looking at this, we do have this retracement that I did over the weekend, and so that would suggest upside possibilities, but really we want to see where the downside might be. And let's see, we're up almost 6% on the day, 80 cents. Yeah, I haven't looked at the charts at all today, really, because I got home from work this morning, went to bed, and I don't get sleep if I look at the charts, so I just stayed in bed and actually slept to my alarm, which is kind of crazy. All right, so there's that retracement. I'm just going to color this one yellow again so we don't get confused. And so, actually, I don't know what I'm doing there. I meant to do retracement from the run up here. That would help us identify a bottom, although it's going to be pretty fine-tuned. And I don't know if you don't want me to do these retracements because you saw the video and I did them in that. I have not reviewed that video, so I'm not sure what exactly I went over in it. I imagine I did these. But yeah, I'm just going to leave that as approximate. And yeah, so I mean, look, this is a full retracement down to there. We did break below. The next level on that would be 55 cents. Could happen. But I think that, my impression is that I believe the earnings are coming up for Fisker. And let's see, news. I don't see anything about earnings here. And I do have the earning thing on. So, yeah, maybe they just haven't announced the formal date or something. But yeah, I mean, I think that this is just so beaten down, and it hasn't been below $1 for that long. It did wick up to $1. Let's see, on January 22nd, so just a couple weeks ago. I believe that was a Monday to start the week, yeah. And then, yeah, it did not close above, opened above. So that's really just kind of like a fake out signal, I'm realizing. And then also a bearish engulfing candle there. And so, but yeah, I mean, maybe there's this wedge pattern here with this trend line. It's quite possible, though, that is a descending triangle and that this could break to the downside. But I feel like, it's just so beaten down. It hasn't been that long since it closed above $1. Let's see, what was the close on the 12th? Close was $1.03. I believe that was the last close above $1. And yeah, so really that's January 12th. And so 30 trading days since from then is like when they get the warning from the Nasdaq. But this is the New York Stock Exchange. So I don't know the rule for $1 on New York Stock Exchange, which I always intend to look up on Saturdays, but I forget to before I make the video. I could do that now if you guys want. Let's see. What is that rule for? Let's see. Let's see, what is this? This might actually, I might have just wanted to click the quick link there. So I'll just make this bigger so we can all read it. Let's see. The exchange and the Financial Industry Regulatory Authority, FINRA, are parties to a Regulatory Service Agreement, RSA, pursuant to which FINRA has agreed to perform certain... I don't think I need to read all of that because it may not get us what we wanted to know. Yeah, so I think I might just click back here. What is the dollar rule on the New York Stock Exchange? A company will be considered to be below compliance standards and accordingly may be subject to suspension and delisting if the average closing price of its listed security is less than $1 over a consecutive 30 trading day period. And so that's the excuse me, that's the exact same rule with the Nasdaq. But then there's 180 calendar days following that for the Nasdaq, at least. I won't get into the nitty gritty with the New York Stock Exchange, but what we can do with that. I'm going to move the volume profile for this, and also I might remove that clutter. Fibonacci retracements are great, but they clutter so much. We can take a measurement. 30 days from this day, right there, wow, January 26th. That is right around when earnings are going to be reported, I believe. And so 30 bars, you can see that there, which is 45 calendar days. That is when, I guess the day following that really, because this close was above $1. So this would be really, I guess, I should move it from this close. Well, I should do it just at $1. And I will make this a perfect horizontal line there. And I should actually, that's actually going to make it. I found that when I make them perfectly horizontal, they're hard to select. See, I will make that, let's see, red. It's a little bit cautious, or maybe I should make it yellow because that is caution. Sorry, I'm just spending too much time on this. But yeah, let's see, looking at the price here, going on, what do I see? I mentioned this bearish engulfing candle. Don't see anything too much like that over here. We do have from here, no divergence, I'm not noticing. Yeah, we did have some divergence here, and then this little run up, and now it's just flattening out. So yeah, I mean, I've got the feeling that 75 cents right around there is going to be the bottom, and this will go up. But I could, of course, be wrong. I'm just like, for me, I'm waiting for that to break. So the lowest close that we got was on January 25th, 74.67, so right around 75 cents. If we see a close below 75 cents, to me, that would either, raise concern this is going to continue going down, or that, just invalidate that this is the bottom. And, that could suck. Maybe it drops 10% that day. Let's see, what was the drop on this day? 3%. So maybe that's a more realistic number. Over here, 9%. Yeah, it could drop a good amount. And maybe, that 55 cents, or I don't know, 50 cents is a level to keep in mind. So what I do with stuff like this, I'm very slow at establishing positions. I started averaging in around here. I think actually right before this run up, and by slowly building a position, it's like, I do one share at a time initially, and then it's like, oh, okay, it's going down more, I'll really get my average down. If it's going up, I could have made more, but it's just kind of practicing that discipline of establishing a position in a swing. And, I can't be in everything that I talk about on here. And so from that, I've just been able to get the average down. It's below $1 now. I'm in the red right now, though. And from that, it's just, let's see. I think that this is going to be going over $1. It just seems pretty clear to me. But it's going to take some time. And that might be around the end of the month when Heinrich Fisker talks, when there's earnings. But yeah. So I don't know. Those are my thoughts on Fisker, I guess. And for me, my preference is to really be doing videos on the weekends, because then you get, the weekly candle. I can look over at that. And let's see. Yeah, this is like showing indecision in the market, probably just waiting for, news to break, whether that's good or bad. And, but, we are seeing a respect of this 75 cents. And yeah, so, I think that, but, of course, this week is not over, so can't really look at that too much. But yeah, I think that it's like, when morale is lowest, it's like price gets drawn down. Just think, I like to think about stocks psychologically. Price is up here. Oh, it's above $1. Everybody's so excited. Or I guess, above $2 here. What was the high of the day here? Almost at $2. So people are like, oh, it's going to go to $2. Yeah, right here, the yellow line. It doesn't. Get this bearish engulfing candle, then drive the price down. Morale is super low. Get a little spike above $1, give people a little bit of hope. And then another bearish engulfing candle, draw that price down. And then people are just, giving up hope here, hitting a new low on that day, and then run it up, just playing mind games with people. And then it pulls back, and now we're settling back at this level, and people are just saying, I'm tired of this. It's not going to stop going down. However, it has stopped going down. It's settled at about 75 cents, with it up at 80 cents today, up over 5% on the day so far. This could be where the bottom is found. And so, yeah, like what I was saying, what I do, I don't load every day, at this point. Now that it's below $1, I have to buy a minimum of 100 shares at a time. And so basically I just do like a weekly buy. Last week during a stream that was on this day, the 31st, it was Wednesday, I saw, oh, well, it's probably going to come back to 75 and revisit that. So I bought the dip the next day. And I think that this week, if it does break lower, if we do put in an all-time low again, I'll probably just wait and see what happens. Hey, Nameless, what's up? I will look at on SQQQ. But yeah, I just, I like to be patient, go slow with these things. Part of the way that Wall Street takes money from retail is they bring price down and then they keep it flat. They bore them. They also drive like theta decay with options. So it's basically as time goes on, the options lose money and people lose money on those calls if they're wanting it to go up. And so, right now it's just like a waiting game, whether it breaks to the downside or the upside. And this is where people, say, I'm done with it. And they sell their bags, and then the week later, the day later, it starts going up again. So I think it's just a waiting game for this one. And I think that by the end of the month, we'll see a pop in either direction. Hopefully, I'm betting on, to the upside. But if it does go to the downside, I'll be positioned to take advantage of that. That's why I average in slow. Because I'm, big picture, I'm usually wrong. Or not big picture, I'm usually wrong, but like short term, I'm usually wrong. And then so, how do I prepare for that? SQQQ. Yeah, and this looks good. I haven't looked at the market at all. I should look at the Nasdaq as well. Where is that here? Yeah, so not putting in an all-time high. And so really like 430.24 is the number to hit. The high today was 430.22. So not able to get that, and then getting this bearish engulfing candle. So that doesn't look good as far as the Nasdaq goes. Probably look over at the SPY in a second, or the SPX. But yeah, this, it's a bullish engulfing candle. This inverted hammer at this downtrend following this big red day, 5% down on the day on the second. That is a reversal signal, and then seeing this bullish engulfing candle following this, yesterday was green. Yes, closing at 11.78, up 4 cents overall over the day. But yeah, this looks like, the bottom could be in. I'm not sure exactly. I don't pay attention to my buys with the SQQQ and stuff like that. But I'm pretty sure I bought a share yesterday, added to my position. I've been doing that for the past couple months. And yeah, and also though too, like you bring up the SQQQ. One thing that I didn't get back all of my shares, but one thing that I was excited about, I had trimmed on a pullback. I think on this, it ran up here, and I trimmed on the pullback, and then it went up a little bit after, closed up here. I was like, man, I should have just not let those go. And it's like, no, I do think that it's going to be coming back to one of these levels. And look at this. This is pretty cool. Yesterday, what was the low? $4.80. What's this Fibonacci level? Rounding, $4.80, the 618. That is like, I'm pretty sure, I haven't looked into it, but I've heard that the 618 is statistically the level price either returns to on the upside or the downside. And so we're seeing now a bounce there with this bullish engulfing candle, 5% on the day with this. And so I don't necessarily think this is the the low. We might be going back to 437 here with the SQQQ. This is, the low. Maybe this is the top of the market. I haven't actually watched Gareth Soloway's game plan for the day because I just woke up before the stream. I got to watch that after it. But I imagine he'll be going over, the market and stuff like that. He does those the half an hour before market opens. So I just find it's a really nice way to start the day. But I've been on the night shift, so I couldn't watch it. And yeah, so I do post links to his game plans. I do think it's a really useful learning experience. That's actually how most of the stuff that I put up on the charts here, I've learned by either watching people or from, and Gareth Soloway, he does a very good explanation of why he's drawing lines, why levels stand out to him. And so it's like I've just been trying to emulate him and his discipline. And so I'm just learning as I go. But yeah, I just like with the market here, let's look up the SPY or the SPX. I want to call it the SPY. It just rolls off the tongue better, but this I think is a better representation of, this being a higher high, because when the SPY was actually shifted a little bit from what I've seen. So it had made a higher high earlier in the SPY than with the SPX, but this is the better reflection of the S&P 500 from my understanding. And so, yeah, this could be, bullish consolidation. It could be a bull flag. Not good at identifying those. But yeah, the compelling thing for me with the S&P 500 is 5,000. I would think that, and just think about it. You got to think about it psychologically, or that's what I enjoy doing. Is the S&P making headlines right now? Sure, yeah, and it's making some because it hit a new all-time high. But what's the headline those news outlets want? They want 5,000. That is, that is the level. Everybody, oh my God, the S&P 500's at $5,000. I've got to buy some. It just keeps going higher. It was at an all-time high 2 weeks ago, and now it's at 5,000. Next is 6,000. And then you get people buying that, and that's when Wall Street can offload their shares, rug pull everybody else, rug pull retail, rug pull, I don't know, the working class man or woman, just trying to think about their future and invest. And, it's at 5,000. It's just going to keep going higher. That's not how it works. People get rug pulled and Wall Street takes their money. And so I think 5,000 is where this is going. And so that is why I continue to slowly dollar cost average into SQQQ, SH, which is short the S&P 500, but not leveraged, and then the SOXS, because I view that because technology outweighs these run-ups. And so that's going to balance out. And with that, semiconductors are going to come down. And so so the SQQQ and SOXS, those are both 3x leveraged. But, the moves, this run up here with the SQQQ, almost 100% going back to the end of October, I believe. And then SOXS, that move is 200. Why? When they're both 3x leveraged, it's because semiconductors and technology more than outweigh, this run up with the S&P 500. And so when those get balanced out, semiconductors, technology, they're going to fall the furthest. Everything else won't have to fall as much because technology outweighs it. And so I continue to dollar cost average with these every week, buy one more share. I should not do that on the long one. I'm not buying the long. But like this, I'll remove these drawings. This every week, I just add one more. I might have actually added an additional one today. Maybe I did. I'm not sure. Actually, I don't think it hit I think I had an order at 270 or 575. Let's see. What was the low yesterday? 480? I don't know. Yeah, I don't know. And also too, in case I'm wrong about this, maybe this doesn't hit 5,000. And so that's why I'm dollar cost averaging in, because I was wrong with Bitcoin. I was waiting for it to hit, 15K or 12K, whatever. And it got to 15,500 and I missed the bottom of that. So now I'm just dollar cost averaging, where it's at now, because I don't want to miss it if it keeps going higher. And I just make sure that those orders are small, so I don't get emotional about them. And if it does continue to go lower, I continue to buy the dip. If it turns around, then I just relax. But I think that this is going to make headlines, and then that's going to, I think that, and also too, it's an election year. So, we are, we're going to hit 5,000 because it's rigged, and because then you're going to be able to it's going to look good politically for the S&P 500 to be at an all-time high. The economy's doing good. And so really too, I think that not to get into politics or anything like that, but with the current administration, if they're wanting votes, I feel like the left, I imagine, is more is less interested in something like the stock market, whereas the right is more interested in it. And if you see, oh, the stock market's at an all-time high, I think that would bring in more people from the right. And then people from the left, are already voting what they're voting. And so as far as the current administration goes, and so I feel like this is going to 5,000 for that reason, for headlines, for Wall Street to offload their shares, to rug pull the everyday guy and girl. And and then I think that these gaps will be filled. And so I'm stacking shorts very slowly, casually, because this stuff always takes longer than you expect. But yeah, I think that, GDX. Yeah, and did you ask about GDX yesterday, or did you ask about gold in general? But yeah, I'll put GDX here. Yeah, I did the miners video recently, and it wasn't too popular. Let's see, what am I looking at? All right, gold. Yeah, I mean, this looks like, I don't know that this is an abandoned baby because it's a big candle. It's a big baby. But yeah, that's like a nice bounce there. It'd be really cool if this was, I don't know if it's technically bullish engulfing, if this closes higher than 2 days ago. But I think that'd be pretty good. And so my understanding, I don't have a position in GLD because it's over $100 a share, almost $200 a share. I've been stacking AAAU, which is just Goldman Sachs physical gold. And so, it's basically, the same pattern, exact same pattern, more or less. But it's $20 a share. And so I believe I added to this yesterday. Maybe I have this alert here because that's what I want to buy at. I'm not sure. But yeah, I've been adding to this. I did have some silver. I offloaded some of that, but I trimmed, because it doesn't look as strong. But yeah, so I don't really know too much about gold, and really my understanding of it really comes from, watching Gareth Soloway. I wouldn't really be too interested in gold otherwise. But, it's just like here you see, I just view this as, you got a cup and handle and then break. But then if we look at this on a longer time scale, I wouldn't really notice this because it looks so ugly. Giant left shoulder, head, small right shoulder are getting this, bullish consolidation here. Again, yeah, so I mean, it's just like, we have this, cup, handle. And so, yeah, I mean, I think this is going to break to the upside. And, what he's talking about, what Gareth is talking about is, it's basically taking a measured move. And this is all stuff that I learn from watching his game plans every day, Monday through Friday. So I'd encourage checking that out because that's where I learn all this stuff. So basically from, the approximate low down here, right around $16, coming up to the top here, that is $4.30, 27%. And then, basically you just take that from the neckline, which I've marked by this blue dashed line, it looks like, right around $20.44. And so that measurement is where you would expect price to go. And so that's going to be putting it up at, around $25. 25% move, pretty good. We can do that with GLD as well. I think I've already done it, actually. Let's see. Just didn't make it. Yes, that's going from, 20% move. So, I mean, let's see, is that about the same? Yeah. Oh man, I want to undo what I just did. There we go. All right. Yeah. So I mean, it looks like, ugly left shoulder, big head, ugly right shoulder, and then, up 20%, 21%, $40 there. So, whenever that breaks, and what you'll likely get is, if we do get a break and then we see some weakness, maybe around 200, psychologically, that makes sense. That will probably serve as resistance around $200. So we'll get a breakout, but that will serve as a fake out initially. And then we'll get a pullback, a retest of the neckline, confirming that as support. and then bouncing from there. So when this does break, wait for a cool off, wait for it to cool in. And what I should do is I should put an alert here at let's see, what was the high? I'll do an alert at, and to be honest, I have too many alerts. I need to go through my alerts and turn them off, turn a lot of them off. I'll do 192. So if that goes above 192, that would be getting above, you know, not above, but getting close to the high here of 193.18. And I'm surprised I don't have an alert on this one. So that is like, just put an alert at 2050. Above 2050. And so, yeah, I mean, that looks like it's going to be breaking out at some point. And so, you know, really, I mean, you can think of it, why isn't it breaking out? This is a gift. This is an opportunity to dollar cost average into a position, whether that's daily, weekly, whatever, however you want to do it. I do it weekly, pretty small position, but it's just really to, you know, give myself some exposure to gold. And really, like, you know, we're talking about the SQQQ, the top of the market. When we hit that top, this stuff's going to come down, or this stuff's going to go up. When we hit the top of the market, it's going to be, this is a counterplay to that. People are going to move their money from the market into gold. And then Big Bird, what's up? Added more BIOR. Yeah, I've been waiting to yeah, glutton for punishment. I've been waiting to add to BIOR. I think I'm just spread too thin right now, so I can't be adding too much. I've actually been trimming some positions, like Lucid's been going up, and so I've been trimming that, as well as AQST, which I want to hold AQST, all of it, but, you know, I'm just spread too thin, and so if I don't have money on the side, I get, I either put money into my account, which I should not be doing, should be saving for bills, or, you know, I just get too emotional and stuff like that. So, but yeah, I'll cover BIOR in a second. I am just going to go over GDX real quick. This, let's see. Yeah, I did my analysis. Oh, and this is on the weekly. Oh, yeah. I hope I did the, yeah, what I was just going over. Gold, I think, on the weekly. Yeah. So let's see here. Yeah, I mean, this could be, you know, it's possible. I don't know, that there's like, maybe from the lows here, just to give, maybe that's like a left shoulder, double head, right shoulder. Maybe I went over this in the video I just did on this recently. But yeah, so I mean, if that is if there's a measured move on that, that would be bringing price down too. I don't think this is going to happen. I don't think it's $22. So, yeah, I mean, and that would, that would correspond with his bottom over here. But I don't think that this is going to happen. I mean, I hadn't really been thinking about gold miners much. But then, you know, learn about gold miners and stuff from Gareth Soloway. And he's, you know, really, he knows his stuff. Sometimes early, sometimes late, you know, whatever. But this seems like, yeah, I mean, I'm under the impression that this is not a head and shoulders pattern because it looks ugly. Also, too, you know, this does look like, excluding this blip up here, this pretty big blip, this does look like an ascending wedge or ascending triangle. And, you know, so I think really, you know, what we want to see is like this level hold as support. So, I mean, really, if we see a close below $27, that's, you know, getting down here, then I think that's a bad sign. But really, we want to look for two closes because we want confirmation of a breakdown. I think NIO is a great example of that. I'm going to do a video on NIO later today. During a stream, Notice that I could have adjusted a line. I adjusted it, looked like the bottom was in, broke lower than it. That was a fake out. We did not get confirmation, and now it's up today. So, yeah, I mean, as of right now, it's respecting this line. If it closes at $27, damn it, I gotta sort through my alerts and just do like only the ones I talk about on streams or, make videos on. Those are the only ones I need to pay attention to. But yeah, $27. And, that would be like a gap fill over here. So maybe that would make sense, but for it to go down that low on a day and then bounce back the next day, because like right here, it's like I've got this level, $29. That's key. We close above $29. It's going to the moon. Okay, what happened on February 1st? Close at $29.03. It closed above $29. It's going to the moon based on my understanding of this. Nope. Drops 3.5% the next day, almost 2.5% the next day, and then we're down here. So you gotta wait for that confirmation. And if in the video that I made, that I had suggested that we need to get a close above 29, we need to have two closes. Always two closes. You got to get that confirmation. Because like right here too. Here's another example. It's like on December 11th, we just cannot have a close below $29 on December 11th. Oh my gosh, we hit a low of $28.61. It went below $29. I've got to exit my position. But it didn't close below $29. It closed at $29.07. Then the following day, December 12th, we get a close below $29. It closed at $28.39. It's going to plummet now. That's it. I'm out. And then the next day, it rallies over 6%. And you then missed out on, if you sold the low, on a almost 14% run up. And so, yeah, I mean, it's all psychology. It's all, how do we scare people out? How do we scare people out while also giving a signal that it's going to rally? And so right now, yeah, and another way that we could do that is, we can make this ugly head and shoulders looking pattern, but really respect this uptrending line. And so I think that a lot of it's psychology and that, so hopefully the bottom is in here, but I just keep an eye out for a close below 27 and then put that on your radar for the next day to see if it closes below 27 again. Because, and then like, that's also, the low over here, 26.58, that's a higher low. And so that could still be following this uptrending level of support. So, but yeah, I'm going to switch over to BIOR because that was mentioned in the chat. And that's one I like to go over. No idea what it's done today. This is, this one's such torture because, this long channel going back to May, the end of May, did get this little bit of a breakout, but price has just been in this channel for so long. And yes, let's see, what are these fib levels that I've got here? So from the run up, from the low here, 75.60 up to $1.10. From that run up, we can then look for levels that it might find as support. And it looks like the 618 at 88.74 cents is being respected. We got a near test of it on January 25th when we hit a low of 89 cents. So really, basically hitting that level if we're rounding. Gotten some pierces of it on the 2nd, 5th, and today the 6th. But, if we are able to hold that level, if we are able to hold the 618, that could be acting as support for the next move up. Where would that take us? I'll do a retracement on that in a second. But I just want to look at, how have we been testing that top of that channel? So over here, it looks like we've been testing it. We didn't get any closes above it until right here, assuming that channel is drawn correctly. We got to close above it on the January 12th and 16th. But then the next day, on the 17th, dropped down almost 13% back into that channel. And so what I could see happening with this, although I think that this is looking pretty promising, and Big Bird, I think that you may need to pick a different stock if you want some punishment, because it does look like we've broken out of that channel, are hugging it. We had 2 closes above it, and now it looks like we're putting in a bullish engulfing candle, respecting the 618 at 89 cents, going up just a little over 2% on the day. But that signal is there. And so I'd really wait. This is a bullish sign. If we do get a close, let's see, above yesterday's open, which would be basically 91 cents. So if we can get a close above 90.87 cents, that would be a bullish engulfing candle. And that could suggest that we've broken out of this channel, at least for the short term. If it is short term, a level that we might be returning to is the 786 retracement here at a price of right around 83 cents, 82.96 cents. So do keep an eye out for that. If we do see some weakness towards the market just closed. The market just closed. So congrats. This is a bullish engulfing candle for BIOR. I think that this is a pretty promising sign. We'll have to see what price action is like tomorrow, but it's quite possible that we could be seeing a run up. And so I'll do a retracement here to get an idea of what levels we might be going to. But if we do bump our head at the 50% retracement, 92.8 cents, which it does look like we did on the day, it would have been nice if we could have closed at 93 cents. Then, look for, where we are tomorrow. Ideally, we want to be trading between 89 and 93 cents, ideally closing above 93 cents. And that, to me, would make me think that this is going higher. But this could be a fake out. I just went over some fake outs with GDX. And so this could very well be a fake out. My line here, this downtrend, the channel, maybe I drew it a little bit off. I'm not the best at, I'm still learning as I'm doing this. But I do think that this looks strong with a bullish engulfing candle. Like look here, bullish engulfing candle, and then we get a run up. And maybe this is not so significant that, we do get a small run up tomorrow. But it's quite possible that this intentionally doesn't look too bullish. So, retail doesn't load the boat. And here, though we saw a bearish engulfing candle, and that looked pretty substantial. So that to me is like, well, this is looking bearish. On that note, maybe this is the predominant signal, because that's down almost 7% on that day following this big green day. Went up 8.5%, a little over this big wick up on that day. I'm just going to remove that so you can see a little better. So this to me, looks bearish, but then it consolidates here, and this is consolidating with this, following this big down move. So this might very well be a bear flag. I believe I just put out a video on, I believe, GameStop about bull flag, and I think it broke down. But yeah, maybe that's not true. I'm just gonna look at what everything went down yesterday, and but I think everything went up today. No, it went up. Yeah, so I think I was saying that this is, oh no, it was, sorry, not GameStop, it was Luminar. Somebody commented from Italy, very nice, I love Italy. I commented, that they liked the video, and I had made it, I believe, it was a clip, I put it out before market open, and there was this, I saw a bull flag, and then it broke down. That was a fake out. You always got to keep your eyes peeled for fake outs, because now today we saw it up over 15% on the day. And so this is a mind game. If you want to win on Wall Street, you've got to prepare to have your mind effed. Because, they're just trying to exploit you for your emotions. And this, to me, looks, I mean, this is tough because we see this bullish engulfing candle right here, but then we have this bearish one that's pretty big. This consolidation here, really, I mean, I guess excluding this big wick down, we don't want to see closes below. What was the close on the 19th? 91.2 cents. We don't want to see close, or sorry, yeah, the close, 91.2 cents. We did see a close below that just recently. So this could be a fake out. This bullish engulfing candle could be a fake out that it's going to break down. So maybe Big Bird, maybe you want to buy more tomorrow. Oops, I don't want the volume profile. I want my drawings. Yeah, so I mean, I think that it's really like red days looking outside of that channel. That looks good, but this does look good, but I think we really need to see a confirmation of that bullish signal. So I think it's going to be really key what we see for price tomorrow. And then I'm just going to do a retracement from the top here. Let's see. Yeah, the top here to the bottom here, assuming that, let's see, the low of 85.65 cents on February 5th, yesterday, assuming that was the low. I'm just going to do a retracement from there. This is probably going to be approximate. And I'm going to make that yellow so it stands out. And so if this is the bottom, where might it be going to? Let's see, the 382 is at right around 95 cents, 94.91 cents. The 50% retracement, and I actually 95 cents because I don't have the lines, the high and low exactly. So let's say 95 cents is the 382. The 50% retracement is right around 97, 98 cents. The 618, $1. So yeah, keep a lookout for $1. Maybe we do get a run up to $1 over the next week. But maybe we get rug pulled and we start going down to make new lows. And if that's the case, you know, prepare for it running up to $1, but not closing above $1. Let's see, what is, yeah, this is Nasdaq listed, so they want to have a close above $1. And so we could see, you know, a run up like we saw previously. I'm just going to remove these retracements. And we saw this run up to above $1, but couldn't get a close above $1. Closed at 97.1 cents. And so, yeah, the last time we closed above $1, this wasn't even a close above $1. This closed at, oh yeah, no, it closed at 109, sorry. Yeah, because this line is at 110. So yeah, I mean, this is Nasdaq. We can take a measurement from there. 30 days, you know, so this day they had a close above it. And so really like 30 days from the day after, let's say, 30, not days, trading days or bars. That's going to bring us out to February 29th, the very last day of the month. Hopefully we get a close above $1 before then. I do think that this signal could suggest that we will be having a rally into the next week. But it could also be a fake out because we've seen that with breakouts here from that channel. But these are red days. We saw 2 red days breakout. Now we see a green day, bullish engulfing candle. Wait to see what happens tomorrow. You know, and I try to not chase. I am waiting. I got this alert here for 75.6 cents. If we return to that level, then I'm a buyer. Or, you know, if I have some extra cash and I want to add to it, then I'm a buyer. But I'm not chasing, and I'm not putting money into this that I need. I'm waiting. And I believe in the company, and I believe that in April this is going to be, you know, like over here we had this run up between pre-market and after hours. We had this run up to $2.32, I believe. And that was from approval of, you know, doing the trials. Now we're doing clinical trials. So I think that this is, I think that $2.32, you know, is a good level to be thinking about for when they do actually get full approval for the drug and the technology that they're working on. I say nameless. How did the Degen name come about? So I've been running this. I I haven't put out a video on it in it for a little while, and I'm probably not going to do it anymore. But it's like my background's in earth science, and I had been running a YouTube channel on like climate science education, not trying to push climate change or anything like that, just trying to understand, educate on how the climate system works in general. And people weren't watching it. And I had been thinking, and doing investing on the side, not talking about that on the channel. I had been thinking that, oh, if, I have success with investing and that is able to fund me continue doing this channel full time, that, I should do kind of a series on the channel called Degen Ed, like general education, but on kind of like degenerate gambling in stock market, crypto, whatever, and how, I had lost a lot of money in it, but then I got back on my feet. I learned the skills of the trade, and yeah, I had this fantasy about having like a series called Degen Ed, Degenerative Education, play on words with general education. And then I realized that that channel was not going to be successful. And so I have a PhD, and so I was thinking about a channel called Doc Stocks, stuff like that. And it's like, but that sounds pretentious, or that sound, I got to think about something else. And it's like, well, Degen Ed, maybe I could start a channel called that. And then I think it's the last video that I made on Chegg, the educational stock. But I had wanted to find a chimpanzee or a monkey in a classroom learning to use for that thumbnail. And then I saw Ed, and his name was actually Chip, I think for chimpanzee, and I just saw him thinking and like, well, I'm doing thoughts on stocks. I'm not making recommendations. I'm just doing a trading journal for myself. He's thinking. That's pretty clever. Maybe I could change his name to Ed, and he's Degen Ed because I'm Andy. And so it was like, I think people were calling me Ed at that time, saying thanks, Ed. And it's like, well, I don't care. I'm happy to be Degen Ed. But, I feel like I need a mascot for the channel. And yeah, him thinking, and it's always his ideas. He whispers in my ear about what stocks to talk about. And but he's mainly just thinking about bananas and how to get to those bananas. It's by riding those green candles up to get them. That's all he's thinking about. But yeah, I just having fun with that. And yeah, yeah, it's like there's this quote from Rick Rubin. It's, the best thing that you can do for your audience as a creator, as an artist, is to create for yourself. Don't worry about them. And so this channel, like my other channel was, I have a degree in this stuff. I want to create on that because I have that degree, to validate it. So yeah, let's see. Yeah, so Nameless is asking a question about climate. And so I can go over that. So is climate a normal fluctuation, nothing to do necessarily with people? So I think there are like two sides to that. And I think that, it's like there's one side that's, yes, it does relate to people and what's going on with it. Like humans do influence climate. There's a lot of people here. We're emitting, CO2, all of that. And so we do have an influence on it. But at the same time, there are natural fluctuations. And so it's kind of this, there's a balance between there. What we've done, though, all of the CO2 that we've released into the atmosphere, it's changed the Earth system, the climate system, much more rapidly than it would have on a geological timescale. Think about, millions of years. And so because we've perturbed, that's a word that's used a lot in the climate science community, because we've changed that process of, basically it's like the dinosaurs die and then they get buried, and then that organic material, their biomass, over time it turns into oil. And so that's carbon stored in the earth. And then we pump out that oil. We disrupt that geologic process of storing that carbon in the crust. and then we emit that into the atmosphere. So we're taking it from it's a liquid, oil. We're taking it from basically a solid state in a steady state in the earth, taking it out and then pumping it into the atmosphere as a gas. And so that's going from really stable to really volatile. Gases are really volatile. And so we've just messed up that whole system. But, the thing that I've found, from making videos for that channel, pursuing a career in earth science, and then kind of stepping away, the pandemic, I think, helped me to kind of step away and realize so after I finished high school, I joined this program called AmeriCorps, and I was doing, it's basically like Peace Corps, but domestic for the U.S., where you're working with nonprofits. I did tutoring, did some construction, worked at some parks. And during that time, 2 years after high school, thinking about what I want to focus my career on, and I saw the movie An Inconvenient Truth in theaters, and that compelled me. I'm very interested in the outdoors. Nature's beautiful. And that seemed like a nice way to kind of pursue that interest while also doing something meaningful. But then after spending, really almost 15 years in the earth sciences and pursuing that as my career, and seeing like Greta Thunberg, this young girl taking time away from school to protest climate every week, I was moved by that. But then I started to think, it seems like there's this impending doom, but it hasn't happened just yet. And when is it going to happen? We don't know. And so I think that it's bad for like me as, 19, 20-year-old going to see this movie and think, wow, I want to devote my life to understanding climate and solving this problem of climate change. And seeing that, and then viewing my career and thinking, well, that didn't really put me in a great place. I was in a studio apartment during the pandemic alone. I was living in Canada, isolated from family, and I didn't really see myself being anywhere different 5 years down the road. And just thinking, I devoted my adult life to climate change, and then I see this little girl, this young woman, Greta Thunberg, beginning to devote her life to this, and seeing how emotional she'd get and how emotional I've been in the past about climate, stories I've heard of other people being upset about it, and then it's just like these things are going to happen, but it might not be in it's like when I think climate science or climate change was really like started to talk about in the 80s, and it's like how many young adults devote their careers to solving that problem and then die from old age before anything, really substantial happens about it, and or anything consequential happens about it. And so I feel like there's just so much push for this, like, impending doom. And, maybe that's going to happen. Maybe, from sea level rise, coral bleaching, temperatures. I mean, we see just a couple weeks ago where I live, I'm in Iowa, we saw bitter cold temperatures because of this polar vortex. And then now I just walked outside to dump out some compost, and I was wearing the t-shirt that I'm wearing now. And it's like, this is a wonderful weather. We see that wax and wane because there's an instability in the climate system. And so the phrase of global warming was, I think, negative for the understanding and acceptance of climate change, because it got people thinking it's one directional. Climate, temperature, weather, it's going to just be getting warmer. But really, it's just because of what we've emitted into the atmosphere, it created an instability. And so like climate is like, there's this saying that climate is what you expect, weather is what you get. And so like you might go to Florida and expect it, like let's say in the winter, expect it, it's going to be so warm. It's good. Or maybe, you go to Florida in the winter because it's supposed to be warm there, relative to the rest of the country. But maybe there's a cold spell. Maybe there's a polar vortex that drives, ice into Florida, and you get a snowstorm. And, that is, you expect the climate to be warmer in Florida, but with climate change, what you expect is changing more, or what you get is changing more than what you would expect. So So yeah, and then also, you see in the news a lot about universities and yeah, I'm really happy that I've stepped away from that space because it's, while good intentions, I think that there have been a number of failures, whether it's in communicating climate science or just, I feel like also privilege too, in, you know, you have a higher education, therefore you know more. And it's like, no, I mean, part of getting a higher education is critical thinking. And so that's, I think, one of the things that really intrigues me about the stock market is A, you're investing in companies that you believe in, like BIOR, that could be having great impacts on people as far as ulcerative colitis. I can now pronounce that because of this stock. And then like ChargePoint, charging stations, we need those, electric vehicles. And then also, I cover natural gas. Initially, when I was thinking, do I want to get into natural gas? I'm kind of opposed to that. But, my house is heated by natural gas. And so it's like this privilege of, oh, that's bad, even though I use it. And so like the green transition is all about like segueing into those things and balancing between, some fossil energy, but then renewables and ideally phasing out fossil fuel energy. And yeah, I don't know. I find this space to be welcoming and enjoyable. And it's just so fun. And so yeah, that's my little rant or tangent about climate science. Hopefully that's useful. Can climate change be positive? Yeah, definitely. Let me think of an example. I think just in general, change, nobody likes change. No animal likes change because they get in is it Arcadian rhythms? Is that the right phrase? But they get into these rhythms with seasonal change, with the time of sunset, sunrise, migrations, things like that. And so you can think of it, maybe this is a bad way to frame it, but let's say there's a plant, or let's say there's an insect. I think that this is actually, what's good for some might be bad for others. And I think this is a great example of that. Can climate change be positive? Let's say for malaria. Climate change is positive. Sorry if that was really loud. Climate change can be positive for malaria, for mosquitoes, for disease. And, that's just basically because, like right around the equator, we've got temperatures where certain bacteria, viruses, insects, or animals can only live within that threshold. But as the planet warms, that will be expanding. And then so there could be more malaria, more mosquitoes. So that would be bad for humans. But, thinking about that, that's an example of temperatures getting warmer. Let's think about temperatures getting colder. How could that be, as far as, or the instabilities around like the polar vortex? I think a positive around that is like the temperature. Let's see, what's the temperature outside where I'm living? 52 degrees. And Fahrenheit, I should say. And so that is a positive. Beginning of February, having temperatures well above freezing, that is a positive. And to be honest, I would rather, where I live, I grew up here, came back after 18 years away. I remember being a kid here and winters just being gray and icy, miserable, monotonous. And now, we had a pretty bad snowstorm, really two snowstorms, which was, I forget their names, but I went over them in a natural gas video. Finn and another storm. But, that we got tons of snow, and that kind of sucked. But, I had a friend that was saying, oh, I haven't taken out my cross-country skis in a while. I'm excited to do that. And so she got to, do some cross-country skiing. Whereas before, we would just get, ice and we not get a lot of nice snow. And then, a couple weeks later, we're getting temperatures that are really enjoyable to be out in. You can be out in a t-shirt. And so I think that's a positive with it. While it's an instability, it makes winter less monotonous, less gray. And yeah, I mean, winters can be, depending on where you live. I went to school in Colorado, and I love winters because of that. Going to the mountains, snowboarding, and yeah, there's nothing more beautiful than being on a mountain in the winter. Um, and yeah, so I think that, depending on where you're at, it can definitely be a positive. Or your mindset, really, Um, yeah, you can get used to the mild winter. Yeah, I mean, because for me, it's like we had a crazy week. I'm sure most places in the States had a crazy week of really bad winter weather. But, I'd rather get that concentrated, have a snow day, or snow week, and then, have it more mild. So yeah, but then also with that, I think there's a really interesting aspect as far as agriculture goes because I live in an agricultural state, the Midwest of the United States, and I remember I think last year, a couple years ago, there was a bunch of flooding in fields, and so it was either affecting soy or corn, two crops that the country probably relies too heavily on. And because there was that flooding, they couldn't really be growing crops. And so, yeah, there's a negative with that. And so, water is a huge factor in it. And actually, if you watch the movie The Big Short, at the end in the closing credits, Michael Burry says, the next thing that he's short on is water. And, or no, maybe he's going along on it. I'm not sure. But there was something about water, something that he was looking at. And so, yeah, water is key. Climate definitely relates to that. But yeah, I saw that there was just one person watching, and then I see another couple people. I was just asked about my background, which I don't focus on anymore, but earth science background. But yeah, I think, on the note of temperatures being really nice and this stream having been going on for more than an hour, I'm going to close this down. And I did put a poll up on the channel, on the community page, and I could actually pull that up before I sign off. Let's see, and I can look it up here. So on the channel here, and you guys can always check this out, community tab, I put up this poll for should I stream the PayPal earnings call tomorrow? And so the Palantir stream that I did yesterday was really successful. I feel like it brought in a lot of people, and it was great. I just put up this poll. It looks like 5 votes. 3 people say they'll join. 2 people say that I should do it, but they may not join. And then I also put this up on Twitter, really just kind of thinking, this could be like a lisp. Sometimes maybe the mic, maybe I'm too close to the mic. Hopefully I'm not too loud. But I did put up this post, 55 votes. Let's see, what's 36% of 55? 55 times 0.364 is 20 people said that yes, they'll join. Other people saying yes, so maybe they'll tune in after. So yeah, I've got to figure out how to do the PayPal one because it's different than how Palantir did it. But I'm gonna stream that tomorrow, just trying to bring people in more. On the note of Palantir, why does Jim Cramer talk about stocks? Because it's just so bad. Very few CEOs on conference calls, at least, talk about self-pleasuring and admitting that they are crazy. But I have to admit, Carp's insanity is growing on me, and the Palantir narrative is compelling. And so, whenever Jim Cramer is bullish, you gotta take it with a grain of salt because the opposite's probably happening. But yeah, I think Palantir's. I saw that it was above 20 at some point today. Maybe I'll just close on Palantir, and then yeah, I'm gonna get on with. Got to make some videos, but I've also got to enjoy a little bit of the light outside before it gets dark and the nice temperatures. Yeah, 22. And this, yeah, like this Fibonacci level, damn, I was looking right here. That's crazy. This confluence of levels here. But what I think, if I were to be queasy about this, I would think, oh my God, it's up to 22. That was resistance before. I'm going to take my profits. But, what we saw following the last earnings call was the big gap up. We did see a wick on that day. We saw a continuation higher. And then bullish consolidation, another big candle up, bullish consolidation, another big candle, and then reversal signal here with an opportunity to exit the following day. So what I plan on doing with Palantir is I'll pull this up. This guy on Twitter, let's see my replies. Had a nice little exchange with him when I was at work. Oops. I was just kind of trolling this person. Let's see what do they comment on it. Garbage. That's what that was. I was just kind of trolling them because I know that's from Harry Potter. It's like if there's something Star Wars, mention Star Trek. If there's something Harry Potter, mention Lord of the Rings. Yeah, so this guy, Volatility, Talati Tapan, really cool guy, always posting charts, posted some stuff on tickers that I've gone over. I've gone over DWAC, as well as Mara, BIOR. He's always posting about BIOR, so he's a BIOR bull as well. And then posted about Palantir, and he's saying above 22 going to 27. And so I commented on that. I think Palantir is going to bump its head at 24, test 22 as support, and then 27. Was doing a bunch of retracements while streaming today, so that was yesterday, comparing with moves following last earnings report. And those levels all stood out. Wish I had a larger position, but glad I'm not on the sidelines this time. He said, I didn't see 24 as a big level. And so the reason why I see that as a big level is because this measured move here, quite possible, we see what I could see as it going up to 20, maybe bullish consolidation here, move up to 24, bullish consolidation, and then top out at 27 up here. And so that would be, big move up, bullish consolidation once, big move up, bullish consolidation twice, big move up, and that's the top. And so it'd be big move up, bullish consolidation at 22, big move up, bullish consolidation at 24, maybe a pullback to 22, and then a big move up to 27, no bullish consolidation, retracement down to maybe this orange trend line that I've drawn, or this white one that's a little thicker. Perhaps hard to see because of all these retracements. But I will do a Palantir video on, dang it, nameless. I got to get going. Enphase. Yeah, I'll do. So I'll do Enphase, and this might be a nice one for me to post. Oops. I don't know. I was typing in the message Enphase. It's like, no, I need to put that up here. Enphase. What is the ticker symbol? Enphase Energy. Cool. And so yeah, I don't have much drawn on here. All right, so and I'm just going to do an intro for this so I can make a quick cut of it for a clip. And so let's see, I'm just going to look at this. And so, hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts during live streams, taking ticker requests live, like of the chart Enphase Energy, ticker symbol ENPH. And so I'm doing this one as this stream ends because earnings, let's see, are today, February 6th. So where is the price going to be going? It looks like it's up about 6% in the after hours at a price of $106.50, right around there, having closed the day at $100.51. And so what I'm going to do is do a couple retracements so we can get an idea of where price might be going, looking on the daily time frame, and then I will take a look at it on the 4-hour and 1-hour chart, possibly a lower time frame, so we can get an idea of what's going on and where price will be headed to the end of the week and into the weeks beyond. And so if we want to look at where a bottom might be, it does seem like we found that with the up move in the after hours going over just about 6.5%, right around 6%. It's moving a lot. And so if I do a retracement here from the bottom at 73.49 cents up to the high here at 39.65, and I'll edit this part out so it magically goes to the right levels. 73.49. All right, and so looking at these Fibonacci levels, we can see that the 618 retracement was hit at a price of $98.76. Does look like we broke below that yesterday on February 5th, hitting a low on the day of $93.53. Seems like a great buying opportunity there. And then today on February 6th, price going up about 2.75% on the day, up to $100.51. As I had mentioned, looking like we put in a bullish engulfing candle there on the day, so that was suggesting strength into earnings. So that's pretty key there, that we have found a bottom at this key level, and also does look like that was tested over here. Let's see, between December 12th and 13th. Did get a break below that, but a close above, and then kind of a fake out the following day on the 13th, having a nearly 8% move on the day, and then following this gap up. So I think it's pretty cool to see that. And yeah, let's see. I do think that one thing that might have been concerning is the 786 at a price of $87.65 was below us before earnings, but seeing that bullish engulfing candle there and really getting a close above that 618 was a sign that this would be going up following earnings. We do have this long-standing uptrend, it looks like. I think I have to switch over to the weekly time frame that goes back to these touch points going back to 2019. So that is something to consider. Just like SoFi, I believe, that recently had earnings, there was a big pop, and then following that, it did bleed in the following trading days. So it's quite possible this will run up, maybe bump its head, and bleed. So do keep that in mind. And so I will do a retracement from the top here to the bottom now that we know that this was the bottom, and that could give us an idea of where it might be bumping its head, where a top might be, at least on the short term. So let's see, I'm just, gotta adjust the tops and bottoms here. This should be 65, and this should be 53. All right, so now that I've got that retracement drawn up there, I'm just gonna make it yellow so we can distinguish it from the other one. And so where might this stock price be bumping its head? 105.41. Price is above that in the after hours now, but just about 7.5% higher. So I don't think that's going to be, the price is going to be bumping its head there. Maybe at $11.15, which is the 386 retracement. Sorry, the 382 retracement. And that, yeah, is right here. So do keep that in mind. We do have, doesn't actually look like there's much of a volume shelf there or anything. Really, we've broken above already. We're at the top of this volume shelf. So I do think where it's at now in the after hours could be serving as support. And the next level really that does stand out to me is the 50% retracement at a price of $116.59. It does look like volume's picking up a little bit there, so it could be bumping its head. But what I find more compelling, especially with this volume shelf here, is the 618 retracement at a price of $122.03. That also does seem to be somewhat similar to $2 off, $2.01 off from the 236. That was the retracement from going on the way up. And so that could be a key range. But with this volume shelf here below that, I could see it breaking above the 50% retracement and not quite getting to the 61.8. that would be, $22. And so really the base of this volume shelf is right around 119.25. You could say, 119 to 120. That might be a top for the stock before there's a pullback. But of course, it could really rally following earnings. Let's see, the last earnings report that we had, there was a drop. And so we're not seeing that. It seems like they are doing well. The company's doing well. And so if I switch over, I'm actually just going to make sure these are locked. Yes. And if we switch over to the 4-hour time frame, we do see that it was rejected from $111.15 at the 382. But it does look like it is consolidating above the 236 at 104.41. Hopefully, we open below that level tomorrow. It is quite possible that this wick up was a sell the rip opportunity going up to $113. So that is something to keep in mind. And then also this big wick to the downside. Sorry, I keep zooming in and out. Going down to $92. Pretty remarkable that it went to these levels. This, kind of makes you think that there's some manipulation in there, something that those levels were wanted to be hit for orders to be filled. And so, yeah, with the big tail to the downside, wick to the upside, does seem like there's some indecision there. But I do see that there's a lot of strength in this. And so, we're going to be seeing a gap up tomorrow. And so we're going to be wanting to pay attention to the levels at $104.41. This Fibonacci level, at that acting as resistance. Can we hold above that? Resistance becomes support. And so if we're above that, it is then support. And then this yellow level here, 111.15. Ideally, we see an open above that tomorrow. But perhaps, this was a sell the rip opportunity and buy back at this level opportunity, and to kind of take advantage of stair-stepping up these levels. And so, really what I see is like the highest target is probably going to be the 786 at a price of right around $130. Here marked at $129.78. A full retracement would be nice, going up to around 140, precisely at 139.65. But, with that being, let's see, the 52-week high actually being higher than that, much higher than that, at $247. There is a lot of room, for this to go to the upside. And so quite possible if we are able to get some strength, consolidation, bullish consolidation, bull flags forming, continue higher, if we are able to get above and get to the 618, close above that level at a price of 122 or, really 124, I think that would show a lot of strength. If we can consolidate above that, then I think maybe the 1618 at a price of $168.15. I do think, maybe that could be on the table for later this year. So do keep that in mind. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. And tune in for the live streams. Happy to take ticker requests live like this one. Thanks for watching. And so, with that being said, I'm going to go enjoy a little bit of the sunshine before the sun sets. And then I'm going to be putting out, I'll go over the calendar real quick. Today, I will be doing a NEO video. Went over that in the stream I think a couple days ago. Adjusted a trend line that seemed like it had broken below support, but actually looked like it was serving as support. And then yesterday we got a fake out below it. So I think the title for that video will be NEO Fake Out Bounce Moon. So I'm excited about that. And Plug has just been on a rampage, so I'm excited to do an update on that. Wish I had a position in that one, but unfortunately don't. But cheering for those who do. And then the following day, Wednesday, it looks like I just have Tilray. I will be doing a clip of GDX as well as gold from this stream, so that should be coming out. Have not had much interest in Robinhood, so not covering that one. But I will be streaming the PayPal earnings tomorrow. Post a link for that later. And then we'll also be doing the normal Thursday night live stream Thursday at 9 p.m. So do tune in for that. I feel like that's where really the exciting stuff on the channel comes up, because I get suggestions from you guys, and then I notice things between the weekly videos that really stand out, like NEO with that trend line. and just, you know, thinking about these the charts in a more casual manner. I think that's what this channel is about: having fun, looking at charts, and yeah, and populating this calendar. It's taken over my life, which I love. It's really nice to see growth on the channel. And then I should note, from the stream that I did, I believe on Sunday. Yeah, I'm confused on which day it is. It's Tuesday now. From the stream on Sunday, I did, Baba was pretty popular, so I'll be doing Alibaba next week again. The other one's not so popular, and I believe I will be doing GameStop again next week, as that one always tends to be popular. And I think Lucid and, let's see, Polestar will also hit 100, so I'll likely be doing those as well. And then, yeah, just populating this calendar, making as many videos as I can, as I have energy for, and seeing the channel grow. It's awesome to be doing this. Oh, and I will be doing a clip from today's video on SoFi. Hopefully I get that out before I go to work today, but possible I'll be putting that out while I'm at work. Don't tell my boss, though. And yeah, just taking clips from this stream. But yeah, it's gone on for an hour and 45 minutes. I got to get going and enjoy some daylight. And so, yeah, thanks so much for joining. I'll be doing the PayPal earnings call tomorrow, as long as I can set that up. I haven't explored how to do that yet. And so, yeah, I'll be posting that later. And yeah, doing Tilray tomorrow, Neo Plug, and likely SoFi, as well as other tickers from the stream coming out before market open tomorrow. And yeah, thank you so much for joining. So much fun doing this. And I will see you guys if you're tuning in for the earnings call tomorrow. I'll see you then. If not, I'll see you Thursday evening, 9 p.m. Eastern, for another one of these casual live streams. So thanks a lot for joining. Thanks for your suggestions. And I'll see you guys